Hello, assalamu alaikum friends. How are you all? So this video is on net present value. As I promised you that I'm going to make a video on net present value calculations because this is a topic which you are going to get in your exam 100%, no doubt about it. And this paper is September 2018 paper. The first question. First question means it's a 50 marks question which is from section A. This question, the beauty of this question, it has two section of the syllabus combined in one. What is it? Your risk management and your net present value. That is your investment appraisal. Right? So this is a very beautiful question if you want to understand both exchange rate, risk management, and also your investment appraisal, the net present value, how to combine, how two things can be combined and asked in one question. Right? But if it comes for a 25 marks question, then it will come separate. Risk management is separate, net present value is separate. But if it comes in section 8, it can be combined and asked. Why? Because this is an international net present value overseas, where you have different exchange rates and all. So first, always start with the requirements before going to exhibits, because it does not make sense when you go through exhibits, you will not understand. But when you read the requirements and with that requirement in your mind, you read the exhibits. Now you are in a better position to identify the information which you need for the requirements from the case study. Okay, so first part they're asking, discuss how investing in overseas projects may enable the Vashi company to gain competitive advantage. Oh, one thing I want to tell you here is that I have done a question on Vashi company, not on the CBE platform, the normal one, the paper based. So I have already done this question, but in a CBE platform, I'm doing this question again. Okay, so discuss how that means I'm omitting some of the questions from here because I've already covered it. Okay, so you can check that video. The name is written as Vashi. It is in your revision kit. Okay, so discuss how investing in overseas projects may enable the Vashi company to gain competitive advantage over its competitors who only invest in domestic projects. What are the advantages of investing overseas? This is something which even from your common sense you should be able to answer, even if you have not read the theory book of AFM. It's for 5 marks. Okay, so I'm not going to answer it. I leave it up to you to answer it. Okay. Part B. Discuss the advantages and drawbacks of exchange traded option compared with over the counter options. This is also something which you will be able to do it. My concern is in part C. Why part C? Because this is the report you have to make, and here only major calculations you have to do. Whenever a report is there in your section A, that is an area where you will be getting a professional marks, number one. Second thing, that is an area where a lot of workings are required. Calculation is required in that one only. Because if you see the other parts, A, B, and we have a D. Yes, we have a D also. They are theory parts. Okay. So let us read part D also. Discuss the validity of the COO's suggestion. 7 marks. So whenever such question comes, discuss the validity of someone's suggestion. How to answer this question I will show you, even though I will not be able to show you the full answer. Write and show you the full answer, but I will show you how to write. Maybe I'll give you in points. Okay. But first two, it's from your knowledge. Directly from your textbook, you will be able to answer. And you should be able to answer it. Unlike part D, okay, if you see part D, this is not something from the textbook knowledge, so this will not help you. Textbook will not help you here. Here you need to apply your own thinking. Creativity is required here. You have to think, and you also have to link with the case study also, how valid their suggestions are. Okay, so first let us do with part C. Prepare a report for whom? For the board of directors of Vashi company. So when you're making a report, you have to mention it that you are writing the report to board of director of Vashi company, the first line. Second comes your introduction, then your main body, and your conclusion. Okay, and the order of your report is the order of the requirement given to you in part C. Okay, if you see part A, first part of C, estimate the expected amount of JPY, that is Japanese yen, receivable under each hedge choice. That means you are given different hedge choices. We still don't know, but we know there are different hedging choices. JP receivable. Okay, so this is a foreign currency receipt. Expect the expected amount under and so the word add, okay, that means there's a separate requirement. Additional debt finance needed to fund the A1 project for the preferred head choice. For the preferred head choice, okay, usually what happens is this, you have to understand. Why is it? Okay, the reason I'm showing you is because usually when they ask this question in a 25 marks question, which one is the preferred heading choice, what we do, we just give a conclusion and say that this will be better, we give some advantages and we don't select one. We can say this one also can be selected, giving some advantages, disadvantages, and we also say that this also can be selected, right? We don't say we select this only, but here in this case you are forced to choose one out of two or three. Okay, we don't know how many heading choices are there. Whatever it is there, out of the methods you have to choose one. One is required. Based on that only, you'll be able to calculate how much additional debt finance is required. That means you have to choose one. Okay, so this word, the preferred head choice, okay, will tells you that you need to choose one. Based on that, your additional debt finance will change. Preferred head choice has to be the best one. Okay, always. There you don't have an option, this or that. There only one answer only will be there for all the students. Next, second part, estimate the net present value. So clearly when they tell you it's good, or the wordings which they will put is whether this project is financially acceptable or financially feasible or financially viable for you to do, then that means you have to do net present value, even if they don't ask you to do net present value. But sometimes they clearly specify that estimate or calculate net present value. Like in this one, estimate the net present value of the A1 project in Japanese yen. They have given you the currency also. Net present value of A1 in Japanese yen based on the end of year 1 being at the start of the project. So end of year 1 being the start of the project year 0. Okay, they have given you that assumption for 9 marks, and the 8 marks is usually what happens in a report is not full of calculation. That you have to understand. Number 1, the first or second or maybe third also sometimes will be your calculation. Okay, and the last part of the report mostly what I have seen is theory, something which you need to write other than your numbers, other than calculations, non-financial factors you have to write. Okay, so you have to be prepared for that also, how to write it in a report. Okay, not just calculations and all. And it's for 8 marks. If you see evaluate, so the word evaluate tells you its pros and cons. The preferred head choice made, here you have to tell about the advantages and disadvantages what you chose in the first one. Okay, the debt finance needed, so you not only evaluate head choice, but you also have to evaluate, that means pros and cons of debt finance needed, head choice, and whether A1 should be undertaken considering both financial and non-financial factors. Okay, this is very important. See, financial factors, I know you will be, most of you will be able to tell, but what you will not be able to tell is non-financial factor, right? Even this is also will come with practice. Once you practice a lot of questions on non-financial factors of other questions, this will be nothing for you. Okay, and finally, professional marks for the format, structure, and presentation of report. Part D does not come in the report. Okay, whatever is after this line, okay, professional mark for the report and all, next whatever questions are there does not come in the report. Okay, it is a separate question. Discuss the validity of the CEO suggestion. That I'm going to do later, or maybe a part 2 of this video will come if I'm not able to finish section C in the allocated time. Okay, so now what I'm going to do is, definitely a lot of calculations are required, so I know that calculations and all spreadsheet, otherwise word processor. Okay, so I know that I have to write a report. Okay, I will just, you can just go to the exhibits before you go to the report and see. Okay, I'm not going to read this whole case study. Okay, make sure that you read it. So here they are going to take why they are going for overseas and all, and they are investing in this. So details of the projects are given in exhibit 3 and 4. Okay, this basically exhibit 1 you can use for your first and second requirement. Okay, which we are not answering here, because if you see, but this you need to, so let me zoom this out for you, because this is something, sorry, I'm sorry, this is something you need, the last paragraph of exhibit 1. Washing intends to finance the project through proceeds from an agreed sale of a European subsidiary. How they are going to finance the project? They have one project, by selling the small European subsidiary with any remaining funding requirement being made by additional debt finance issued in Japan. The company is due to receive the proceeds from the sale. So they're selling the European subsidiary in 6 months' time and receiving it. So that is a foreign receipt, okay? And they will invest this funds in a short dated treasury bill for a further 6 months before they need it for the project. This you have to understand, because we are doing some later we have to invest also. Once you get the receipt, the foreign receipt for 6 months, you're not just taking as it is. You need to invest it for further 6 months before you're actually using it for the project. Okay, so and they have a centralized treasury department which hedges expected future cash flows against currency fluctuations. Funding and financial information. So here you have been so another question is which one should I do first? Exchange or a net present value? It is definitely your exchange rate which you have to do first, because here they asked you the first requirement of CE is estimate the additional expected amount using using a preferred hedge choice and the additional debt finance. Then the second requirement only they asked you net present value. So first you have to work out the preferred hedge choice. Okay. So 80 million euro in 6 months time. Okay, in 6 months time 80 is receivable. This is receivable. Okay. Rest all they talk about treasury department and all. They have given you the spot and the forward rate, and they have given you the future and the option. So that shows you that you have to use forward, future, and option 3. Okay. They have given you the if you see they have given you the annual yield on short dated Japanese treasury bill. Why? Because they have told in exhibit 1 that you are going to invest it for 6 months. The 80 million what you have got before you use it for AR1 project. Okay. And then what? You can zoom from here. Okay, just press plus sign. Okay, so inflation is given. AR1's annual inflation is 9%. Okay, in the last 5 years, the Japanese annual inflation, and it has been stable for many years. So Japanese, you will understand very soon why the inflation is given. Some of you might be able to predict from now why this inflation rate is given. Why is this inflation rate is given to you? This is a foreign project. So the receipts you are getting is in what currency? The receipts you are getting are in euros, but you are investing in Japanese yen. So you need the currency from Japanese to euro. So if you are not given the spot rate directly, you will be given the inflation rates of two countries. That means you are using the purchasing power parity theory to predict the exchange rates. Okay. Why? For the net present value, you have to convert the net present value, right? From euro to Japanese yen. That's the reason they have given the inflation rate, the two inflation rate. That means what are you using? You are using the purchasing power parity. When you are using two inflation means purchasing power parity theory you are using here, that formula. And here they have talked about over the counter and exchange traded currency option. That is not needed for this part. A1 project information. Now you can see, okay. So if you can see, the estimates are based on the notes given in exhibit 4. For that you have to use the exhibit 4, but not on the further information. That means whatever the further info, if you can say exhibit 4 is notes and further information. Whatever is there in notes is taken in the table. Whatever is further information you need to include. It's not there. Okay. And the estimates have been checked and verified independently for their numerical accuracy. All the figures are in ARD millions. Okay. You have to check the currency also. If you see, 3 currencies are involved here. The trick comes here only. The trick is here. That's the catch. 3 currencies are involved. One is ARD, the other one is Euro currency, the other one is Japanese yen. So the examiner could give more than 2 currencies, not just always 2 currencies. They can give you 3-4 currencies also. Okay. So if you can see, and this project is for 4 years, they have given you the sales, the cost, the tax allowable depreciation, pre-tax profit, the tax allowable depreciation. Again, they have added it back, working capital, investment in both building and machinery, and cash flows in this one. Okay. We'll keep this aside, notes and further information. Okay. So notes which are incorporated, what is it? Estimates are based on using the end of the first year when the project commences at the start of the, so the end of the first year they are taking it as start of the project. Okay, numbers are given in AD millions. Okay, the total investment required is 10,150. Total investment is required 10,150. If you see how 10,150, this one, you add the working capital, you add the investment in building and machinery, the total is 10,150. So this is your investment. Okay, and separated into buildings, machinery, and working capital. The machinery is eligible for tax allowable depreciation in Australia and based, and working capital is redeemable at the end of the project. Okay, we can go and check. We can go and check here. We saw the working capital, the 400, fully it is redeemed, and also tax allowable depreciation has been added back again. Okay, because they told the machinery, the machinery is tax allowable, right? So this 4,000 they are taking equally, the straight line basis 1,000, 1,000, 1,000, 1,000. That's how they are getting it. So it's correct. Nothing you have to change. Impact of inflation has been incorporated into sales and the cost at the current Air1's current annual inflation rate. So if you go and check the sales and the cost figure, just go to the sales from 13 to 30.8, and it has been already been increased by the inflation of ARD and even the cost. Okay, so inflation has been taken, you don't have to inflate it again. Corporation tax has been included on the annual rate of 15%. Okay, the tax is payable in the year that the tax liability arises. Okay, further information not incorporated, these are the things we need to incorporate. Okay, what is it? So there are 4 points. Okay, undertaking the Air1 will result in lost sales for Vashi company, and whenever they say lost sales or redundancy cost, it needs to be taken into account. Okay, they are your opportunity cost, because you are investing in something means you are losing somewhere else. So if you are undertaking the Air1 project, you will lose sales here. Okay, this sales would be generated pre-tax contribution of, so this sales which you are losing will have a pre-tax contribution of this one in the first year rising. Okay, wait a minute, this needs to be highlighted. Okay, we'll have a pre-tax contribution of Japanese yen 1110 in the first year of the project, rising by the Japanese rate of inflation in the following 2 to 4 years. Another reason, rate of inflation, you can, now you have to use rate of inflation. Remember, further information was not incorporated in the estimates. Now you have to inflate it. Point number 2, Air1's cost includes components which are made in Japan by Vashi and would be imported into Air1. The pre-inflation, before inflation, here also you have to inflate. The revenues from the sale of components are estimated to be as follows in Japanese yen. So the components revenue has been given. Okay, this revenue is expected to increase by Japanese rate inflation from year 2 to 4. Contribution which they expect to earn on this component is 25% of revenue. So what is the contribution? Is 25% of revenue. Okay, contribution means what? Your revenue minus your variable cost only. So here, what, you don't have to work out in your cost. Okay, you just can take 25% of revenue and you will get the contribution. Next, the Japanese annual, see, the Japanese tax, okay, is 30%. Okay, so Japanese corporation tax is and tax is payable in the year that the tax liability arises. A bilateral tax treaty exists between Japan and India which permit offset overseas tax against on. So whatever tax if you have paid on overseas earnings, okay, let's say in the overseas the tax was for let's say 20%. So that means if you have paid 20% tax there in Japan, the balance, the 10% you will pay, not the whole 30%. Again, you will not pay in Japan. Okay, it will be offset. There you pay 20% overseas, here only 10% you will pay because Japanese tax is 30%. Finally, the last one, Vashi, and most of the time, right, I have never seen up to date a question where the bilateral tax treaty is not there. So you don't have to worry about it. It will always be offset, right? They will specifically, they will write it. They will tell you in the question that bilateral tax treaty agrees and it will be offset or not. Vashi's finance department has estimated a cost of capital 12% to be used as discount rate for the project. So 12% is the cost of a capital. Definitely they will give you cost of capital because for net present value always cost of capital is needed or cost of equity depending on whether it is whether there some, because sometimes debt is totally not there, so that time you can use cost of equity, but most of the time for net present value it is cost of capital. If adjusted present value also comes, then it is cost of equity. You use to discount net present value, but since this is just a question on net present value, you will be using cost of capital. Okay, so what happens when you recommend that you are using this or investment has to be undertaken, there you can write this assumptions. Okay, there you can question the validity of this discount rate, whether it is this 12% is reasonable or not, how they predicted and all those things. Next, chief operation officer suggestion, right? What was their suggestion? Which you need to see whether you need to. This comes for part D. Okay, the last requirement. The CEO has suggested that it would be more beneficial for the company to let its major subsidiary companies have their own individual treasury department instead of having one centralized. So it's like decentralized versus centralized treasury department. They are saying better to have decentralized treasury department rather than centralized treasury department. So you have to say how validate it is, because they told it will be beneficial. That means you have to validate whether it will actually be beneficial or not for 7 marks. Okay. Now coming to this, I'll be opening the spreadsheet. Okay. So what I'm going to do here is, today I'm not going to write a report. If you have seen my question on acquisition and merger, okay, on the CBE platform, I have made a video which I made previously made. There, when I was writing a report, what I did was I was writing the format of the report and all. Simultaneously, I was doing the calculation, and then at the end, once the format is done, I just took copy pasted the number, or from my calculation I just copy pasted in the report. Today what I'm going to do, I'm going to adopt a different approach. Now I'm going to make the report at all. I'm going to finish all my calculation part in Excel, and then I'm going to make the report. That is also could be done, because writing a report also takes few minutes. Okay, it's not easy, it takes few time. You need to write an introduction and then all this. And definitely, where will my workings go? It will go and appendix. Okay, under appendix. So if app, and if you're using many more than one, definitely you're using more than one, so you can first write appendices, the plural. Next, I'm going to number each appendix. Okay, you need to work. It's not just all the workings you are putting under one heading only. Each working needs to be put in different heading. Especially when calculation is required. Okay, make it a habit that you don't put in the main report, you put it in the appendix. Okay, like this. Appendix 1. And appendix 1 comes for which part? It's better that you make a mention of that also. It comes in, you have to write it, by the way. Okay, part C, the first part of part C, I. Okay, better that you even write it also. Just one word I want to see. Okay, that option is not there. Okay, you have this option that you can wrap tax. So now I'm going to write Japanese yen, JPY. For Japanese yen, you can even write JPY. Receivable from sale of European. So that whole thing you can write, okay, from zero of European. Or what you can do is I'm just going to copy paste from my requirements, okay. You can even do this. You can even copy paste it to the Excel. So if you just copy paste, this much is enough, okay. So if you see, I'm not being able to paste. What's the reason behind it? Okay, I'll try to paste here. Okay, so I'm not able to paste it. Please make sure what's the issue, that why I'm not able to do it, because if I try to fix it, it will take time, so I'm just writing it. Okay, wherever in the exam you have this issue, that don't try wasting time to find out how to copy paste. If you're not able to do it, just type it. Okay, these are the things which you need to do in the exam. You have to be smart enough because time is limited. Quickly in the exam, there'll be so many instances where you have to take a decision when something is not going in your favor. Like this, if you can see, I'm not able to copy paste. Don't panic. Okay, students, please, I advise, don't panic. It's easy for someone to panic and then do mistakes all over. This is just the beginning of your question. Sometimes a lot of things, you have studied, you have prepared well, it was everything was working in your favor, all the functions, but you were not able to open something, not able to copy paste, not able to highlight. Don't panic there. Try to find alternative. Try to make your brain work in the alternative. What else can I do? If you're not able, like this for example, if you're not able to copy paste, just type it. That's it. That would be the best option, in fact. Okay, European subsidiary. Okay, under each hedging choice and the additional debt finance needed to fund the Air 1 project. I'm not going to write the whole thing. You can just complete it. Okay, so now I'm going to use the forward rate. Okay, so I will just bold it. Under forward rate, you can write which rate you are taking. Since it is a euro receipt, right? Since it is just undo. Okay, since it is an euro receipt, the lock-in rate, the rate, okay, the rate of which rate you are using. For that you have to go to this one, not this, this, and see for the forward. Okay, 6 month forward you are taking 125.3 or 128.6. This is euro. Okay, and if you see the base currency is also, wait a minute, let me highlight it, is also in euro. You are receiving euro, so that means you are selling the foreign currency to get Japanese yen. You are selling euro. You are selling euro at a lower rate, so you will go by 125.3. And don't ask me at this stage, coming at this stage when you have your exam to give next week, how to decide which rate. Okay, by now you have to close your eyes and you should be able to tell which rate. So the rate of, please write the currency, just don't write 125.3. Okay, JPY 125.3 per euro. Okay, just write per euro will be used. Make sure that you write this. Okay, this itself is enough. You don't have to say that they were going to buying at a lower rate or higher rate. If you say it's a euro receipt, that's why this is the rate, it's enough, it's understood. And if it's a payment, this is the rate, it is understood, that's it. This much is enough. So the expected receipt from sell. Okay, expected, or you can just say receipt from the sell, whatever, however you want to term it. How much? So it's better that I can do the calculation here. Okay, and I will just write it in equal to bracket. What is expected receipt from sale? How much am I going to? Another thing, multiplication or division. See, it is 120. How much was this thing? Receipt 80 million euro. So 80 million is in euro. The rate is in Japanese yen. That's why you have to write this Japanese yen down. Do you understand? If you just write 125.3, it would be very hard for you to decide whether you multiply or divide. But when you write it 125 Japanese euro per euro, you will know that you have to multiply or divide. So you are having 80 million euro and you have 125.3 Japanese yen. Different rates, currencies, multiply. So 80 multiplied by 125.3. Okay. 80 multiplied by 125.3. Enter. Enter. So this, now you can keep this, and here you can write it in terms of currency. Okay, you can just insert the symbol and the Japanese yen, because when you take it, when you type it, you will not be able to write Japanese yen. So go to symbol and take set, right? You already have the currency dollar in your laptop, right? The keywords, your keyboard only has the dollar sign. Rest all you need to go to the symbol and insert. So if you see, just undo it here. So here, just because don't keep your number as it is, somewhere write this thing 0.224 million. It's in millions, so write million. Either you can write the currency, or just you can write JPY also. Okay, anything is correct. You can put the yen also, you can put the Japanese. Wait a minute. Something went wrong, I guess. Yes. So JPY 224 million, comma. Okay. This looks much understood, right? You can just bold it out, or you can highlight the cell. Okay. Now, next is future. Bold. Here, what are you going to go for, a long or this one? See, if you see the marking scheme, there are two ways how you need to write this answer. You can write this answer. It's up to you. I give it, right? The option is up to you. Here in the marking scheme, what they wrote is future contract needs to show a gain when the euro depreciates against the yen. Therefore, short position is needed using the 7-month contract. This kind of look a little bit complex. When you read first time, you will not be able to understand which will give you gain or loss. So I don't prefer this way of answering. Okay, there is an easy way which I have been following. If you see, future. Okay, and it's a 6 month. We saw it is for 6 months we need. So definitely 4 month is not there. 7th month only we are going to choose this for the future. And since the future, it is the contract size. Just check the contract size. It is in euro, and we have to sell euro, right? So we have to sell euro means selling is a short position. So in this way, it's much easier for you to understand. Okay, so you can say, what are you going to say? Just copy paste, because the number only I'm going to, since it is an euro receipt. Okay, since it is a short position is there. A short position, or open a short position. Open a, or buy or go short in future. Any way you can phrase it. Okay, open a short position. Anything you can say. Since it is an euro receipt, open a short position in euro future. Okay, you have to mention which future it is, which currency future it is. So it's in euro. Okay, EU. Since it's euro receipt, open a short position in euro future. And just saying open a short position is not enough. You have to say which month. Okay, using the 7-month contract. Using 7-month contract. So many places my spellings will be mistakes will be there, so please don't mind those mistakes, right? What's important is for you to understand, but don't make the mistake. Okay, it is assumed that basis will depreciate proportionally to the time expired, so that you can it's not needed, because they tell you that is expected it will go around, but I think here they didn't say so, but anyway, it does not matter. Okay, now what do you have to find? Closing future price. So predicted future is, you have to find the closing future price. Okay, predicted future rates, or you can write closing future price. Anything. There are two methods. I'm just going to follow one method. Okay, I'm just going to use the spot and the future. What happened is, sometimes what they do is they take the 4-month expiry and 7-month expiry and compare this two. But textbook, when you follow textbook, they follow the 7-month expiry, the opening future with the spot. So I am also going to take the spot and the future, the same way the textbook has been done. The other method, if you want to follow, where they have compared it with the 4-month expiry, the 7-month expiry with the 4-month, you can see the marking scheme. But anyway, using both the method, answer is same, right? It's not always that the answer is same. Remember that you can get different answers. Okay, but in this case it is same. Now 7-month, this is the opening figure. Which spot are you going to take? When we took forward, it was this rate, because we are selling euro, so we will be selling euro at a lower rate only. So definitely the spot is 129.2. Okay, $129.2. So it will be, what is the opening future price? It is 125.2. Okay, 125.2. Oh no, put the equal sign, equal to 125.2 plus the difference between the spot and the future, which was 129.2 minus 125.2. No, just don't put the bracket here. Okay, so the difference between the spot minus the opening future price, multiply by, you have to multiply it by what? The fraction. There's a fraction. Why? Because exactly we are not closing on the same date. See, the project is for how much? 6 months, if you see, and the future we are taking is for 7 months. So 1 month is there, 1 month is unexpired, so it's 1 over 7. Okay, 1 divided by 7. Just press enter and see how much, what are you getting? 125.7. Okay, so if you just use it as it is into 1 over 7 and press enter, it will show you the answer. Now what are you going to do is you are just going to round up the figure, this number to 1 decimal please. 125.8 is the predicted future price, the closing future price. Okay, now what you have to find, the number of contracts sold, number of contracts. If you see my steps one by one, I'm following one after the other, one after the other. Okay, it's better to do one after the other rather than doing, crossword, the horizontal way across, because it becomes very confusing. What is the working, what is the main answer? So number of contracts, because you need the number of contracts and all those things we have to find out. Okay, so the good thing is once we find the number of contract in future, same thing we can use an option there, we don't have to find the number of contracts again. Okay, so what is it? Number of contracts will be, you can put the equal sign wherever you want to put, in whichever cell you want to put the final answer, you can put it there. Okay, so what I'm going to put is the function I'm going to put here, equal to how many it is, 80 million euro, and the contract size is 125,000 euro. So you can divide the 80 million euro by 125,000. So what I'm going to do is 80, okay, 1 2 3 1 2 3 6 zeros after 80, divide by 125,000 and press enter. 640. So 640 contracts. Okay, next, expected receipt from cell. Okay, better to bold, you can even highlight it, it's better that you highlight it. Okay, so that later you can compare out of future option and forward. Expected receipt from cell. Now you have the closing future price, now you can find the expected receipt from cell. What will it be? Equal to number of contracts, 125 to the contract size multiplied by number of contracts, multiply by 640, or you can click that cell 640 into, what is it, what is the rate, 125.8. just now we took the closing future price 125.8. Okay, enter. Don't forget to extend this, this is in millions. Okay, 10,064 million. So in case if you want to drop down the zeros, what you can do is from here you can drop down the 3 zeros. I'm sorry, wait, no, just keep 125,000 as it is originally. So this is in millions. Okay, it's hard for you to write it. Let's count the number of zeros after 4. 1 2 3 4 1 2 3 4 5. So there are 6 zeros, okay? 164 and then 6 zeros. That means 160. So how are you going to write it? If you have to write it in terms of million, it will be 10 0 64 million. If you have to write this, it will be like this. 10, sorry, Japan is yen, 10 0 64 million. Okay, this is how it will be when you have to write this whole number in million. Well, how did I do that? One might question me that how did I do this? Since there are 6 zeros in millions, just drop down the 6 zeros. That's it. Just drop down the 6 zeros. If you count the number of zeros, just see. Sorry, 1, 2, 3, 4, 5, 6. Just cut out the 3 zeros and then the number remaining will be 10064. So you just write a million in front of 4. 10,064 million rather than writing the 6 zeros at the end. Okay. So if you have to write it, if you have, because why, just compare this and this. The forward you are getting 10,024, but here 6 zeros. It becomes very difficult. Okay, wait a minute. It's better that I highlight it here. Okay, sorry. No filled. Okay, this I will fill. Okay, this I will not able to put it in this cell. What is the reason? Just let me copy paste this somewhere. Okay, copy it here. So this things I can just okay. So the same way what I can do is here also I will just copy paste this. Okay. So this I'm going to, okay, so now it's much easier for me to know this is forward, this is future. Okay, now what is the next thing? Next is options. Now in options, what do you have to do? Option, it will be much easy. You can just write 640 contracts because same contract size, okay, and same currency holiday. 640. Okay, just go to this and see. It is 4 month. Here also we have this 4 month and 7 month. It is definitely 7 month. Call or put, you have to decide. This is, what is it? It's a foreign currency receipt, right? it's a call or a put option. Think, because this answer, it's a foreign currency receipt. So foreign currency receipts are call option, but here it's not a call option. Here is the put option. Tell me why. Why is it so? The reason why is because it is quoted. Look at it. It is in. Yes, you can think. It's a put option, right? Why is it so? Because normally what happens is your options, okay, options are priced not in foreign currency, in your own currency. I'm sorry, it is priced in terms of your currency, right? And you are buying or selling foreign currency. Either you're receiving, either you're borrowing. That's why it's easy. That for borrowing, it's a call. Sorry, for borrowing, when it's a foreign currency which you are borrowing, it's a put option. And when it's a foreign currency receipt, it's a call option. But in this case, it is put because it is priced in terms of Japanese per euro. Your base currency is foreign currency. Okay, that means in euro. So you are selling euro. Okay, because you're getting buying receiving euro means you have to sell euro. Selling euro means it's a put option. It's a put option. That's why it's a put option. Okay, otherwise normally you try other questions where these options are there, and where it's a foreign currency receipt, when it is the contract, it is priced in some other way, not in this way, then it's a call option, because it's a receipt, foreign currency receipt. But in this case it's a put option because the way it is priced. Okay, 640 7-month put option contracts. Okay, put option contracts will be purchased or bought, will be bought to protect against the depreciation of euro. Because this is a foreign currency receipt, if your foreign currency depreciates, your value when you convert it to Japanese yen, it will reduce. That's why you have to protect against the depreciation of a foreign currency, depreciation of euro. Okay, now if options are exercised, okay, the reason why we are saying if options are exercised, because we know options are not binding, it is optional. Sometimes you exercise, sometimes you don't exercise, but here let's assume we are exercising. Okay, because we have to compare the three things. Okay, so how much it will be? Equal to, what is it, 80 million euro. I'm sorry, what was the contract size? Okay, 125,000 is the contract size. Multiply by how many contracts? 640 number of contracts. Multiply by options are exercised. You have to use exercise price. What is exercise price? 126. It is 126 Japanese yen. So you multiply by 126, enter. Enter. Okay. This, if you have to write in Japanese, same. There will be 6 zeros. Just cut out the 6 zeros. Just, okay. Japanese yen, it will be 10,080 million. All the 6 zeros you have to remove, okay. That's why 1 0 will be there, will be remaining. Because with the 0, there will be 7 zeros. That's why that 0 is there. This also, just okay. Because now you see, it's consistent. All are in the same line. And all are highlighted in yellow. So you can easily compare which one is giving the highest receipt. And that one shall be selected. Here, there, you don't have to talk about advantages and disadvantages. For that, we have a separate thing. You just have to decide and go on. Okay, but this much is not enough. So this I'm not going to highlight. If you have seen that something needs to be, then you write no fill. Okay, this cannot be highlighted. The reason is, where is the premium? So this is an area where most of you we get wrong. Okay, JPY 10,080 million. Okay, so we'll keep it here. We'll write the main answer there. Okay, now premium payable. We have to pay the premium. Okay, so the premium payable will be equal to, okay, 125 is the contract size, multiply by number of contract is 64, multiply by the premium. Okay, what is the premium? To get the premium, go to this and check out the premium. Premium for 7-month put option is 3.8. Now if you see 3.8, can you take 3.8 as it is? Definitely you can take 3.8 as it is, because here what happens is, normally in the textbook and other questions, your premium is quoted as cents. But here it is not in cents. That's why you don't have to multiply, divide, do anything. Okay, usually we divide it by 100, but here you don't have to divide it by 100, because it is not in cents. Okay, so 3.8 as it is you can take and multiply for the premium. 3.8 and enter. This is the premium. This is the premium. You can even put a negative sign outside, because to show it's a premium outside the bracket. Okay, so the net income will be sum, just this, take out this 2, deduct your premium from that. This, if you have to take it in terms of now, you have to take this, just drop out the zeros, that's it, the 6 zeros. So you'll be left with JPY 9,776M. This needs to be highlighted. Sometimes it's okay. So we have seen already 1 hour went just to do this. Okay, but in your time you have to take even less than 1 hour, because the question, the 50 marks question, you have to take at least 90 minutes, and I have taken 1 hour just to do this. That shows how fast we have to be. Okay, because we are still left with so much of calculation, net present values left. Then we are left with section D also. So now what is next? What should be a conclusion? You have to write 1 line conclusion. Okay, what is it? which one you have to choose. Preferred hedging choice is a receipt, so you will choose the one which is highest receipt. If you see option is giving the lowest receipt, option is out. Little bit forward and future is giving the highest, so you will choose future. Okay, so this conclusion you have to write. Conclusion. Now this conclusion you can write in the report in your Word or in Excel also you can write. Futures will be chosen because it gives highest receipt. Because it gives highest receipt. This much is enough. Okay, my spellings are wrong, but does not matter. Highest received, therefore will be used to hedge expected future receipt. This will be used to hedge the expected euro receipt. You will be chosen to hedge the future receipt or the expected euro receipt. Because if I write future receipt, again it's a confusion. There are two future. One is the future, the time future, the other one is the hedging method. So future will be chosen to hedge expected euro receipt because it gives highest receipt. Okay, this line is enough. One line you need to make. For 1 mark you'll be getting to write this conclusion because question asked you what is the preferred hedging choosing method. If you go your requirement and see, estimate the expected amount and then for the preferred hedge choice and the additional debt finance. Okay, we have to write these amounts in the report. These amounts will go in the report. Okay, the one highlighted, anyone in this conclusion will go in the report, but just for now write it in Excel. Next, what happened that with that receipt, with this future receipt? What are you going to do with this? You can even put a separate color because we have chosen that, so you can put orange color. Now we are going to invest this. Okay, we are going to use it for investing because they told we'll invest it for 6 months before we used in AR1 project. Okay, I will be going a little faster because otherwise I will not be able to finish it in time. It will take so much of, I think more than 3 hours it will take if I go like at this speed. So the receipt invested, okay, this, okay, investor for further 6 months still needed for AR1 project. Okay, till needed for AR1 project. Okay, next, how much will it be? Okay, so what is it amount? This amount 10,064 million. Okay, you have to invest it. What is the investing rate you have been given? You have been given 1.2%. This, okay, this person, and this annualized. Okay, annualized means as for 12 months and you need it for 6 months, so that means it will be into 6 over 12 or half divide by 2. It's the same only, we are taking half of it. Okay, so equal to, okay, you can take this, you can take 10,064 or you can take this whole number. Let's assume we have taken 10,064, okay, and multiplied it, comma, 1 plus, what is it, the rate, what is it, the rate was 1.2%, so it will be 1.2% divided by 2. Okay, first it is 1.2% divided by 2 and then you have to take 1. Okay, add with 1, so I will just put it somewhere here. before I put this, because if you put it in one line it will not come. So 1.2, okay, just 1.2 divide by 2, 0.6. Okay, now I can put it. Okay, $10,064. Obviously it's in millions, or you can put the whole number also, but then later when you put it you have to drop down the zeros. That's why I'm just putting 10,064 multiply by 1 plus 0.6. Okay, how much you're getting it? So if you see, no, it is something is wrong here. It is 1.2% you have to take. So now if you see, answer automatically changes. Okay, so here you can take the rounded figure, or you can take the whole number. Later you can round up. Okay, this much Japanese yen you need. Now you have to convert. Remember, you have invested and you got this much. Okay, you have to convert this into what? Japanese yen. Why? I'm so sorry. This is already in Japanese yen. Okay, so when you're writing it in Japanese yen, JPY 10, 124.4 million. I've just rounded up to one decimal place. Okay, so this is in Japanese yen. You have to convert it into AR1. Remember, because we are investing in AR1 from this. Okay, but before that we have to find out the additional debt finance. Okay, but first let's convert this into AR1. Okay, now if you see and go to your exchange rate, just see, we don't have a currency where you can directly convert your Japanese yen to ARD. First you have to convert the Japanese into euro, and then using this rate you have to convert the euro into ARD. This is known as what? That means twice we have to convert. This is known as spot cross rate. Okay, spot cross rate. Okay, so what should we do? How do we start about it? How do we use this cross rates? It will be 920.7. Okay, 92. Oh, this is so very irritating. 92.7 is highlighted. Okay, 92.7 divide by 132.4. That's one. Okay, 92.7 divided by 134 and 95.6, the second rate divided by this rate. Why is it like this? That this over this and this over this. When you're taking the cross spot rate and when you have to convert using cross spot rate, you cannot take the two things on the same this thing. Okay, one will be asking, okay, one will be the bid price. That's how it goes. What happened is, here Okay, if you check here, what are you going to do? Okay, you have Japanese yen. Okay, you have Japanese yen in your hand at the moment. First you will be going here, this one. Okay, before you convert ARD, you have Japanese yen in your hand. You need to sell that Japanese yen to get euro. Why you have to buy euro? Because if you don't buy euro, how will you get ARD? It's like that. First you will buy your euro from here, go here, sell your euro and get ARD. That's how you are going to get ARD, right? So you have Japanese yen at the moment. So you have to sell that Japanese yen and buy euro. You will be buying euro at a higher rate. Can you understand the logic now? Why 132.4? You are buying euro at a higher rate. Select that number. When you are buying euro at a higher rate, here you are going and selling that euro to get ARD. You are selling at a lower rate. That's why 92.7. It's always cross reference, okay? It's not on the same line. So this and this and this and this. It will go like that. Okay. So if you want something, ARD divided by, you want to get ARD per 1 Japanese. So first you have to divide this 92.7 by that. ARD per Japanese, right? It is not Japanese per ARD. It is ARD per Japanese. So 92.7 divided by this 132.4 or 95.6 divided by 129.2. That's how you are getting the price. Okay. So spot cross rates. Okay. Definitely a part 2 of this shall come because this will really take a lot of time. I'm still left with so many working. Okay. So spot cross rates. If you are taking the spot cross rates equal to 92.7 divided by 132.4. Okay, you are getting 0.7. Round up this to, oh sorry, I'm sorry. Round this to 1 decimal place. This comma 1. Comma 1. Okay. Next. For next it will be equal to 95.6. In whatever condition it is, ARD divided by Japanese yen divided by 129.2. Okay, now this round up this to 2 decimal places. Because if I round this to 1 decimal place, what happens? This also 0.7, this is also 0.7. It cannot be like that. You need the ask and the bid price, the two ranges you need. So equal to round this number, comma 2 decimal places. Now do you see it is 0.7 and 0.74. Okay. Definitely the lower is the bid price and the, okay. This is the buying rate, this is the selling rate from the bank's point of view. Okay. So if you have to write this, it will be spot cross rates 0.7 dash 0.74 ARD per 1 Japanese yen. Okay, this is how you write it. Make sure that you write it like this, otherwise it will be very confusing. You will not understand what is the 0.7 and 0.74. Why are we taking? You can have all this working, but you need to have this. Yeah, need to write it like this. Okay. Next, what is it? You need to convert this. You needed to convert this into 12 months because the rate which we took is by using after we have invested it for 6 months. We need it for the 12 months. That's how we are going to find the exchange rates for every year. We cannot use the 6-month exchange rate. Okay. So now expected ARD per Japanese yen conversion spot rate, because you are not being given the spot rate directly in 12 months. Please write the time. You need to write the time. Okay, 12 months will be equal to how much? Equal to 0.7 multiply by which rate? Because we are selling, okay, we have been using which rate? You have to understand which rate are we using, by the way. 0.7 or 0.74, that is also a thing to ask. Okay, so here go to here, euro. Now just you can write a table also here, ARD per 1 Japanese yen. So you need ARD, right? You have to sell the Japanese yen to get buy your ARD. So sell Japanese yen at a lower rate. That's why you are selling it at 0.7. That's why you are using 0.7. Okay, not 0.74. Multiply by, now here you have to use the two inflation rates of the country. Remember, we have been given the inflation rates here. Where is it? We have been given the inflation rates of the two countries, 9 and 1.5%. I've told you use purchasing power parity. Okay, if you forgot what is purchasing power parity, let me take you to the formula sheet. And just check here. The purchasing power parity, this one. Okay, we are using the spot rate, multiply 1 plus inflation of the counter country, divide by 1 plus inflation rate of the base country. That's how we get the exchange rate. Okay, so what is the base and what is the counter currency? Counter currency is Air 1 and base currency is Japanese yen. Okay, so Japanese yen's currency will be in the denominator and base currency will be on the top. Air 1. So here multiply by 1 plus the inflation of the Air 1, which is 9, divide by 1.015. Okay, already it has converted it. Okay, so if you convert it, make sure it's converted into 2 decimal places. If you convert into 2 decimal places, it will be 0.75. Okay, by just looking at it you can write it 0.75, otherwise you can do it here also around to 2 decimal places and all. Next we have, now what is it? Now we have kept this ready here, 0.75. We'll be starting with that exchange rate. Okay, I will put here 0.75. Okay, so here now the additional debt finance required, very important. Additional debt finance, this much if you write is enough, needed to fund the Air 1 project. Okay, how much debt finance you require? Okay, and you have to Write this in Japanese yen. Go through it briefly because long time I haven't gone through this question. So okay. Yes, you need to write it in Japanese yen. That's why we got all the spot rates and we have converted the spot rates and all. We have been given the ARD. Just go here and check. We have been given the ARD. We have to convert it in Japanese yen. Why? Because the requirement asked you net present value of A1 project in Japanese yen. So initial investment, if you see, it is 10,150. This 10,150. Okay, ARD in millions. So 10,150 million you have to convert into Japanese yen and it is in year 0. And we have the exchange rate now in year per year 0. We have just taken it. Just open the spreadsheet and then we are going to take the additional debt finance. What is it? You can even write here. Okay, equal to, oh, it's better you write it here. Equal to 10,150 divided by, okay, because 150 is initial invest divided by what, which just now we found this exchange rate 0.75, because it is ARD per Japanese. Automatically it will convert into Japanese yen. Okay, for year 0 in 12 months, even though it's in 12 months, it will be, because remember year 0 will be taken as year 1. And yeah, so enter. So what is the debt finance required? Okay, so I can just round up this to whole number. If I want to round this to whole number, this comma 0 1353. Wherever you have this recurring decimal or so many decimal are there, just take the whole number. Okay, it's better to take whole number in fact, because debt finance required and all, it makes logical sense also that we'll be using the whole amount, okay, rather than using fractions or decimal numbers. So now debt finance required, debt required, how much will be the debt required? Simply you are this minus this, what is it, this, which this minus, okay, because this is the total amount you need, right? Investment, you can even write here investment amount required, which I didn't write here. Okay, investment amount required I didn't write. This 135 is investment amount only. Okay, please write here investment amount required. Okay, minus how much? This much, because this is what you have invested for the 6 months. Okay, why is it showing you value? So it is this minus, if you see here it will not show. Okay, so either you can write here, no, it's better that you write here 10. Okay, 10,124.4 3408.6. Okay, this is the amount you require. This is the required Japanese yen in millions. Okay, this is the amount you require. This I can highlight it in yellow. Next, I'm coming to Appendix 2. Hereafter onwards, I'm going to go a little fast. Okay, Appendix 2 is what? Net present value. It is for the second part of C. Net present value, and the project year. Okay, so project year starting with 0, project year. So 0, 1, 2, 3, 4. Just okay. If you see it's too much, so just you can bring those numbers here like this. Okay. Now I have all the 4 years, including with 0. So now cash flow. Cash flows in which currency? In ARD, in millions. Okay. So starting with 0, it will be put minus 10, 150. Okay. All these are in millions. So I'm just dropping down the 3 zeros. 10, 150 million. Cash flows in ARD. Okay. One, it will be this. I can just take from here. All this I can just copy paste. Okay. 25356 this as it is. So 2530, 2530. All these are positive. Okay. 5760. Then next we have 6780. And we have 1655. Next we have the future exchange rates. All these are in ARD. You need to convert into Japanese yen. Using what exchange rate? Future exchange rate, okay? Or exchange rate, whatever it is. Working one was done for that, so working one exchange rates, okay? 0.75. Next. How will you go to next? Simply take this, multiply it by 1.09. Every year you need to multiply by the, because you are using purchasing power parity, okay? So multiply by the inflation rate, divide by the inflation rate. 1015, okay? Just drag it. So just take it into 2 decimal places. Okay, everything will be taken in 2 decimal places. 0.81, 0.87, 0.93 and 1. Okay, this will be the exchange rate. Next, in Japanese yen, million. Okay, so this next, okay, it will be in Japanese yen, million. Cash flows. How are you going to find the cash flows? Equal to this multiply by this. I don't think it's multiplication. Wait a minute. If it's, it is not multiplication, you have to understand this is division, right? Because this is in ARD and this 0.75 is in ARD per 1 Japanese yen. So you need to divide, not multiply, divide. Okay, and just drag it to the other cells. Okay, if you take it's very big numbers. Okay, the numbers are very big. 3.466. Okay, next we have lost contribution. Remember, after cash flows, whatever is first you get the cash flow. Once you convert into Japanese yen, then whatever your, if you have redundancy or whatever you have lost contribution, you have to take here now. Okay, so how much you are losing? Lost contribution, 25% of revenue. So 25% of revenue, you can either use calculator to do it manually or somewhere write 1000, 2400 and each year take 25% and then put it. Okay, so now 25% of 1200. is 300. Okay, no, I'm sorry, I'm so sorry. Here they have told in this first line, says with a pre-tax contribution 110 in the first year, rising by Japanese rate of inflation. That means 1 point. What was the Japanese rate of inflation? 1.5%. Okay, so 110. So first year you don't inflate it, you put it as it is 110. Okay, minus 110. From next year onwards you have to increase it by 5%. So here once you do it, it will be this multiply by 1.1. Okay, 1.015. Okay, so it will be like this once you drag it. Now see, if you have contribution, what should you do? You have to pay tax on that. Now you have lost the contribution, that means your tax will be saved, you don't have to pay contribution. So that tax saving also you have to calculate. See, all these things, when you look it immediately, it does not come in your head. That's why you have to be very alert. What else you are missing? You always have to ask this question when you're before you finalize and finish it everything off and try to rush into making a report. Ask yourself while doing in the Excel, what else am I missing, especially tax part. Okay, so tax saving on loss contribution. Whenever some tax you are using, please write the rate in front of it. If it's in this case it is 30%, they have told. Okay, so just take 30% equal to 30% multiply by this rate and just okay. And here it is tax save, so don't forget to take out the minus. How can you take the minus? Just multiply the same number by minus 1. See, just a little brain, and then because if you try to change the original to minus, sorry, positive, then that will become positive. Whenever you want to make something from negative to positive, just multiply by minus 1, because minus minus will make it positive. Okay, these are little tricks. If you know, it will do wonders. Now next we have contribution components. Okay, for the components we have a separate contribution. This contribution is different from what you have lost. Okay, contribution components. I'm not writing the whole thing. Okay, separate working is there, working 2. Okay, now if we now I've just gone through the marking scheme. Separate working is there for all this. Okay, this exchange rates they have take, that's why working 1 is there, but here directly I have taken into this only as it is, but separately also you can keep the working. What is it working 2? I'm not doing the working 2 and all. Okay, but you have to do it. What I can show you is just you are taking 25% on all this. Okay, just 25% on all this will give you the contribution. Okay, post inflation you have to inflate also, don't forget to inflate. So what happens is on first, okay, I'm not going to do working 25% on 1200 is 300. Okay, next you cannot take this 2400. Okay, you need to inflate this 2400 by percentage. Okay, 2400 into 1.5%. Okay, maybe I can do it somewhere. Maybe I can use a calculator and do it, right? So 2 point or 2400 I will clear. 2400 multiplied by 1.015 equal to, on that you are taking 25%, 609. Okay, so like that do for the others also. I'm just putting the numbers. Okay, others also you inflate and then take 25% after inflating the figure. Inflating means, let's say the third year when when you are going here 2500, how will you inflate this 2500? Multiply by 1.05 1.015 to the power of 2, 300 into 1.015 to the power of 3. Okay, inflating this figure, not from the previous one, and then taking 25% of that. Okay, for that a separate working is there, so make sure working is there. Now do you see the depth of workings required in section A? This means you have to practice a lot to manage your time well. It's very easy that you can lose out of time from here. That's the reason I'm not doing many of the things. Okay, and the one contribution which you have been given a pre-inflation, what you have to do is post-inflation, then find the contribution 25% on that after you inflate. Okay, additional tax payable, now you have to find the additional tax payable also. Working 3 is there. Okay, but all these things you can just copy paste it here. Now contribution is there. Now tax contribution means you have to pay tax on component contribution. Okay, so just tax is how much? 30%. 30% on this tax. Now it will be in minus. Okay, so we just put a minus sign outside, then this into 0.3, that's it, and then drag it to the other cells. Okay, next what do we have? Additional tax payable. Remember we have double tax treaty and all, so for that we have to pay the additional tax here. Additional tax payable. Additional tax is how much? How much is additional tax? 30%. Okay, you have to understand. Okay, annual the tax rate is 30%. Okay, and they have been paying tax at what rate? Corporation tax at 15%, and here it is 30%. So the difference 15% you have to pay. Okay, because in Air 1 you only paid 15%, but the other 15% you have to pay in Japan out of the 30%. So it is 15%, and for that working 3 is also required. Okay, what is it? Pre-tax profits. What are the pre-tax profits? Okay, so working is there. I will do the working here. W3. Okay, working 3 for additional tax payable. Okay, starting with 1, 2, 3 and 4. So pre-tax profits, what are the pre-tax profits? These are the pre-tax profits. It's already taken. This you have to take. Okay, 1000, 5600 and this one. So we'll just take it here. Okay, thousand 85,600, 6,800 and 300. Next, what do you have to do? Remember, these are in what? You just cannot take 15%. Okay, if you're doing it, That means you are not alert because this is an ARDA, AR1 currency. First, you have to convert it into Japanese yen. How are you going to convert it into Japanese yen? Simply using the rates. What are the rates we are using it? Just now we have got the rates. This rates 0.81. Starting with 0.81, okay, because we are starting from 1, not 0. In this case, 0.81, 0.86, 0.931. These are the 4 rates which we are going to use here. Okay. Copy. Paste. What happened? Okay, so the reason why it didn't paste is copy, and when you go here, okay, when you are taking a formula, remember you have to go for paste special and take the values. Okay, then only it will take the values. It will take the whole value. Okay, it does not matter. Then now what do? What do you do to find the tax? Simply, okay, or divide this by this rate, okay, in bracket, sorry, divide this by this rate, and then multiply by 0.15 because tax, and drag it to the other cells. Okay, so now just copy this to the cells, paste special, just the values. Okay, it will take the values. Okay, when it takes the values, this has to be in minus. Okay, or you can just add a minus in front of it. So once you put a minus, because it is tax, it will be deducted, additional tax will be deducted. Now what next? Net cash flows. Net cash flows. Okay, net cash flows, just take the sum and take it. So this, what you can do is, since I'm just going to do it for, take all the cells even though nothing is there, because in the other cells when it copy paste it will take all the cells. Can you see? So you can just drag it. If you just take that one cell, the other cells will only take the cell, the first cell, when you just take this in the sum. Now I'm just going to just see. Next, discount it. Cost of capital has been given to you 12%. So present value at 12%, or discount at 12%. Now how do you discount it? Let me see whether a formula has been given or not. To just go to workspace help and go to all the functions if you want the net present value. Okay, so simply if you want the net present value, it is there. Okay, the rate. Okay, so the rate and okay, so when you want to find the net present value directly, what you can do is, I'm going to write it here, equal to the rate, it is 0.112, first the discount rate. Now I'm going to use the function. Okay, you have to take from year one. Okay, all these rates, net cash flows. Why is it showing? Wait a minute, just They told that, comma, at a discount rate of okay. Okay, you have to write that net present value. Okay, net present value. Then you have to write 0.12, comma, all this. Now do you see? You have the reason why it didn't show is I didn't write equal net present value. So in case this you can use when you are short of time, where you have to write enter present values rather than wasting time. Wherever you can save time, use functions and save your time there. This is a great advantage of using Excel. Okay, now you have to deduct this. Don't forget, this is the total present value. You need to deduct this to find the net present value. Even though they show net present value, it is not the net present value. So the net present value will be, what is it? Okay, okay, I can just show here, equal to this. Okay, see, it will be this plus this or this. If you put this minus this, then it will be added because this minus minus number. So what you can do is you can just write the sum function so that you don't get confused between the sign, comma, this, where you want to just add up the two cells, just put comma, and if you see the net present value, it is in negative. Okay, it is a negative. It's 408. So the expected net present value is, what is it? It is negative. Okay, this million. So that shows that project you should not go ahead with the project. That's what you have to write in your report. Okay, so we have finished writing this, doing all the calculations and all. Now what you have to go in word processor and write the report. Okay, so when you write the report, you have to write, I'm not writing it, you have to write report to the board of director, Washi company, introduction. Okay, what would be your introduction? Your introduction would be, this report evaluates whether or not Vashi should invest in the AR1 project and the amount of debt finance required to fund the project. The evaluation considers both financial and non-financial factors. Okay, so when you are writing, the first paragraph will be evaluation of the preferred head choice and debt finance required. Okay, this, so first is report to whom and the introduction. They leave some space and then it comes your first evaluation. Make sure that your subheadings are bold. Preferred head choice, this will be your first subheading after introduction, and debt finance required. Okay, so I think one more question is left from reconstruction, and that will be over with all the AFM revision. We'll be almost completing the AFM revision only. So make sure that you say future and then what is the debt finance required and all. Okay, and write the amount also, how much it is. So this is the first subheading, and the next will be evaluation of AR1 project. That's how you decide your subheadings. Your subheadings are never very long. Okay, it's very simple, very small sentences. Evaluation of AR1 project. Okay, and your third will be conclusion and evaluation. So when you evaluate, talk about financial also, non-financial factors also. Conclusion or recommendation, whatever you can write. Okay, conclusion. Okay, so make sure that you read all the conclusion and all those things. Okay, and some of the numbers you have to copy paste from the Excel. Now before I end this part is left, part D. Let me close all, and part D, validity of CEO's suggestion. What was their validity? The decentralized is better than centralized treasury department. This question is also a very common question about treasury department. You will be asked a question, right? Most of the time. Even I have been asked during my time a question on treasury. So for theory, when someone wants to learn treasury, centralized versus decentralized is important theory question, which one must know. Okay, you could be asked a question from this area. Okay, so when you have to discuss, first you talk about the benefits of centralized treasury department, a separate subheading, or benefits of decentralized and centralized, and then you say which one weighs more. You can suggest. You can say whether it's yes, it is valid to say based on this factors, or it's invalid. You can write it. Discuss means as an open-ended. Okay, there's a lot of a spectrum. You can either answer yes, centralized is better. You can say decentralized is better. You can say both have to be used. You have to give your own judgments, but you have to make sure that you study what is decentralized and centralized and their advantages. Very important thing. Make sure you read the answers. Okay. With this, I have finished a full question on net present value. I'm not going to do another question on net present value. I think this one question is enough for you to handle any net present value questions in the future, because all net present value questions works and functions in the same way. You start with sales and then inflate it, cost inflate it, take tax allowable depreciation here. Okay, here already net present value, if you see here, AR1 project information, already it has been there. Normally all these things only we calculate, but it has been calculated. What we did was we converted it into Japanese yen. To convert it into Japanese yen, we did so much of spot exchange rates, and then we used a preferred hedging rate to find how much debt is required and all those things. Okay, normally we should be knowing how to work on tax allowable depreciation. Okay, the working capital, all those things. And we inflate, so inflation will be given, and inflation is different for each one's. Okay, so and you should be knowing, sometimes rather than giving you the two inflation, they might give you the two interest rate. That means that case we have to use the interest rate parity. Okay, so you should know all these things. If something goes wrong, what should I do? Let's say I'm very slow in using calculator, quickly go to Excel and use. If I'm not able to finish in Excel, what should I do? Quickly use the function of net present value and do it. Quickly find the function of IRR and do it. Quickly find the function of, whatever is there, a lot of functions. Okay, again I'm showing you, go to the formula shed, under the workspace help, towards the end. Okay, you will be given with this space at the end, where you can say commonly used spreadsheet formula. Go there, all the formulas are there. Okay, just see the example formula. This will be able to tell you. Read the whole thing. Okay, sometimes you might, just because you might miss this one, and you might miss one simple thing, which means your formula might be wrong. Read the whole thing in that. Okay, it's important whether using comma or you are taking the whole range. All those things are very important in the functions and all. Make sure you perform all the functions while you are practicing in this few days, and you are thorough in all the formulas. Okay, make sure that you know it. In case you forgot the function, no problem, you can go here and see it. Okay, all those things. Normally the round. Okay, some functions we always use, sum, round. Okay, or average might be at times, right? Net present value, yes. So all those things. Okay, round and all those things are normal common functions, but for AFM, net present value, IRR and MIRR, these three functions are, it's like very common. Okay, so with that I stop this here, and I wish you best of luck, and I hope you have seen all my videos by now on net present value, investment appraisal, where I have did adjusted present value also. I have done acquisition and merger. I have done theory questions. I think 2-3 questions I have done. And then what else is remaining? Exchange rate. I did currency risk management, but I think I should do a question on interest risk also, where collars are there and swap is there, right? Definitely I will do a question on that. And what is left is reconstruction and reorganization. reconstruction reorganization is left, and interest rate risk management is left. So these two areas are left, and I think that's all I have covered. So this is like your revision going on. Okay, if you have missed out on any part in my previous videos when I was explaining you the concept, don't worry, you still can be with those. Okay, the other students, you can be at their pace who have covered the whole syllabus just by watching this few videos on CBE platform which I'm doing in this last week, right? And definitely I'll be making for the financial management students also. The reason I'm taking time for them, I'm doing late for them, is because AFM, you know, we understand the nature of it. It requires a lot of preparation, a lot of things in it. Financial management is something which I can quickly, one or two videos will be enough for me to cover the whole thing. So I can quickly go through it. It has MCQs and all those things. The students somehow will be able to manage it. But AFM, yes, AFM is something, it's a professional paper, and writing so much in a professional paper in CB platform is a challenge in itself. Whereas financial management and all in CB platform, still people are used to it from before, right? They have some, because MCQs and all, you just click the answer and get the right answer, and then only section C you have to work out. For financial management students, on section C only you have to work out. So yeah, and before I go, I want to thanks all my subscribers, because I have reached 500 subscribers. I think it's 502 now. So soon I'll be reaching, inshallah, with all your support and prayers and the love you have been giving me for the content of my videos. I have seen many people are passing. I have passed in the past because of my lectures and videos, and I hope that the same shall remain, right? Most students shall pass in the upcoming exam and in the near future, inshallah. And thank you so much for keep commenting, requesting me for videos, and then liking on my videos, seeing my videos, and actually sharing it with your friends. Thank you so much. Inshallah, we'll be reaching 1K subscribers soon. Till then, take care. God bless you. See you in my next video.